What is going on, Alpha Hunters? Hope everybody's having a very fantastic week. The markets are closed for the week of September the 13th, and we had some nice little bullish action in the second half of the week. So let's kind of go through it. Let's talk about some of the data that we got this week. Kind of just know what was going on. Wednesday, we did get inflation data. We got CPI stuff. So we got total inflation rate year over year prior. Remember last time we got this last month, 2.9%. Forecast was calling for a reduction of 2.6%. The actual came in at 2.5%. So inflation trending in the right direction, but the question is starting to be, is that way too fast? There's a case to be made about that. Core inflation year over year, same kind of sticky though, 3.2%, for prior as well as forecast and actual. So it's just kind of flat there. We also then Thursday we got PPI inflation, and PPI year over year 2.1%. Forecast is calling for 1.8%. Actual came in at 1.7%. Core came in at 2.3% for prior. And then forecast is actually calling for a little bit of an uptick to 2.5%, but it came in at 2.4%. So it had a little bit of an uptick there between last month to this month. Anyways, initial jobless claims did come in at 230K, which was directly in line with forecast. It's been a while since we said that one, but prior was 228K. That is kind of some of the economic data we got this week. We did have a nice little gap up there on Monday, a little bit of a higher roll. Pulled back there, kind of going into midday, nice little bounce. Then kind of pull back and a little bit of a bounce there in the afternoon. Tuesday we got a little bit of a bounce, pulled back the first half of the day, and then kind of bounced there the second half of the day. Now it was kind of interesting as we went into Wednesday, because Tuesday night we also did have the election debate here in the U.S. between Trump and Harris. So there was some volatility around that. Not much. It really wasn't all that bad. But the first hour and a half, or really even hour, nice little pullback there, the SPY, SP 500. And it was really kind of an interesting look here, because if you look at the Qs, the NASDAQ, compared to like the RSP, the DIA, IWM, those three were making lows. The Qs actually weren't selling off as hard. So the Qs weren't breaking down last week's lows. The SPY almost did. It did not quite. You can see that low spot there from Wednesday compared to last Friday's low there. Did not quite break that down. So it got close to breaking last week's low. The Qs did not. Qs were actually showing a little bit of strength there in the first little hour and 15 minutes or so of Wednesday. And we're kind of looking at that on the live stream. It's kind of like, kind of interesting. Typically when we get that, we usually get pretty strong moves. Well, and then right after that, we just started to move bullish the entire day. So, Wednesday was a pretty strong bullish day after that start. And then Thursday, kind of flat open. Not really too much kind of going on. Pull back, kind of a choppy bullish day. And yeah, it looked pretty good. Also then Friday, nice little gap up, traded higher, and then sideways pretty much for the rest of the day outside of that first hour or so. Anyways, that's kind of how the pace of the week went. Just kind of mixed in with some economic data in there, debate stuff Tuesday night. All right, take a look here at sector rotation for the week. You can see XLK Tech really ripping higher from that kind of low there early, kind of mid-morning there on Wednesday. Tech really just kind of crushed it higher. Even you can see that gap up that they did have there on Wednesday. So Tech was leading the week. Discretionaries also did pretty good. Communications, industrials, real estate, utilities, materials, kind of all just a little underperformance there. Healthcare, staples, financials underperforming, and energies, the big underperformer. So energies actually had a pretty bearish day there Tuesday and Wednesday. Tuesday there was some demand data that kind of came out. It's not really like a major one, but it is starting to kind of like raise some eyebrows. And just kind of want to show you how well the market did, from that Wednesday low that we kind of put in to kind of the end of the week. You can see Tech just really kind of ripped it there. Semiconductors did really good on Wednesday. If you want to take a look at NVIDIA, AMD on Wednesday, they crushed higher. You can see communications, discretionary is doing pretty good in materials and industrials, utilities, energies, and financials, real estate, staples, healthcare, all kind of underperformed there the second half of the week. All right, the VIX moved a little bit lower this week. Pretty much every day just moved lower. We did try to bounce there on Wednesday, but after that morning sell-off, we did rally pretty good on the market, and the VIX dropped off pretty good. So we just kind of moved lower every day this week, getting back down to that mid-teen area. So it should definitely, at this point in time, if we go bullish, I mean, just might slowly grind lower. DXY, the dollar index. Okay, we did push a little bit higher to kind of start the week, and then we had that drop there Thursday. Nice little lower wick on Friday. Still think, we might just be in a choppy area, right on the support line around 101.3. So we might just be chopping sideways. If we do wind up breaking down, you're probably looking for a move back down to this low back last year on July. So that would be where you're looking to possibly take a bearish trade to, or probably dip buy in that area. GLD Gold Trust finally broke out of this kind of just multi-week pennant pattern here. I mean, very tight in here, but we got a nice little move there Thursday, broke out, and it continued out Friday. Kind of been mentioning I'd just rather be bullish on any dips. Been kind of saying that for a good part of just about a year now. 10-year yield dropped off a little bit this week. That's all I got. I mean, maybe it keeps going lower. We're still not into the super choppy zone yet. We might have started getting into it, but this is a pretty choppy zone that we had back in late 22, beginning of 23, and that's all I really kind of got. If we get through like a 3.3 level, yeah, then yields might be really crushing lower, but I don't see that happening anytime soon. So yields probably just be choppy. All right, 10 and 2 inversion. So I'm not going to show off everything that we kind of looked at on the live stream earlier this week, but I'll kind of give you the highlights. So if you do want to go back and look at it, I think we did it on either Tuesday or Wednesday. I'll leave a link timestamp, below. But we looked at like the 10 and 2, the 30 and 5, the 10 and 1, the 10 and 6 month. We looked at a lot of different ones over a longer period of time, like going all the way back to like the 50s, 60s and stuff like that. So as far back as some of those would look, as we can look. And what was kind of interesting is very rarely when, we were hardly ever inverted this much. Hardly ever inverted this much. And real quick, if you do look at the 10 and 1 year, you will notice that it is still inverted, but it did have a nice little reversal there on Thursday from that drop that it had on Wednesday. So this thing might start steaming to the zero line and get above the zero line and non-inverted line as well, but it is still not, above the zero line. So just be mindful of that. Anyways, the thing to kind of know about the some of these yield curves when they uninvert is they kind of tend to chop around the zero line for an extended period of time, like a few weeks. It's not like they just go smashing through to higher levels. They don't really, they didn't typically do that. They didn't just run higher. The few times that it did run higher, I would say we were due for some pretty good sell-offs not too shortly thereafter. Now, there was some pretty much more clear evidence and looks at the yield curves, when they uninverted in like 2000 and 2007, when those yield curves uninverted, it was kind of like a little bit more picture perfect of when they uninverted. We saw pretty good sell-offs shortly thereafter, especially here on the 10 and 2. So yeah, there's quite a bit of look at that. I didn't want to do all that here because if you're interested in it, we did do it. I'll just leave the timestamp below. But back in the like 60s, 70s, 80s, it was a little bit more inconclusive, I would say. A little bit more evident and very much more picturesque, I would say, in 2000, 2007. But we did get our second week in a row closing over that zero line here on the 10-2. Gonna start to really percolate people's ears. All right, something very important is we got coming up this next week is the FOMC rate hike decision. Right now, it is almost a coin flip, but for a quarter point rate cut, 55% for a 50 basis point cut, 45%. So almost a rate cut, not quite, a little bit more lean there for quarter point. My thoughts on it is I'd be very shocked if they did a 50 basis point cut. I would expect a quarter point cut. And if they didn't do, as I think that would probably just send the wrong message about what we know of financial conditions, the economy, market, all that kind of stuff. And if you do get a 50 basis point cut, expect a bullish pop. I would start to not go bearish, but I would start to sell out of some stuff. That would be my take if we got a 50 basis point cut. Here's a quick look at the IYT. Nice little bullish pop there from that nice little lower wick that we got on Wednesday. And not too bad. We just didn't get above this hump that we put in late August, early September. But it's just kind of chopping sideways here. RSP, the equal weight SP 500, nice huge lower wick that came in there on Wednesday. Yeah. Wow. So after that, though, we rallied pretty good there Wednesday and Thursday, back up roughly to the all-time highs, looking pretty good. RSP looks like it'll probably continue to lead into new all-time highs, and I would expect that. The DIA also looking like it's going to be hitting all-time highs pretty soon. There you go. That's about it. Nice huge lower wick. Nice end to the week. Nice volume that came in on Friday. Interesting. So nice volume at the all-time high area. We did not quite make a new intraday all-time high, but we got pretty close. IWM looking pretty good. Nice little lower wick that came in there on Wednesday. And that was kind of one of the things that if you just notice on the RSP, DIA, IWM, all three of those on Wednesday traded, at least on Wednesday, traded below the lows of last week. And that's kind of one of the things to kind of note as we take a look at the Qs here in a second. But nice bullish run there to end the week on the IWM, even up 2.5% there on Friday. Nice move. Qs, you see the Qs did not trade below last Friday's low. Gapped up on Monday, kind of a little lower wick there Monday, Tuesday, even a pretty good lower wick there on Wednesday, but it did not trade lower any day this week, looking pretty good. And have a little bit of a one white soldier there on a weekly time frame. If you do take a look at it on a weekly, nice little gap up, nice little run higher, looks somewhat decent. Now, the interesting thing is going to be obviously around Wednesday, FOMC rate cut decision day. We are a pretty good bit away from all-time highs. We're about 5.9% away. I'm going to quickly look at the SPY here. SPY about 0.5%. Quite a bit of difference. So I would expect some all-time highs to be hit across a lot of these ETFs, not the Qs this next week. So as we do that, one, if we are doing that Monday and Tuesday, even early Wednesday, I'm not changing the thumbnail because I don't think we'll do that. Okay. But if we do that, I would say start to look to sell some position. I think the Qs weighs too much. That would indicate that the Qs have changed direction, and you got to take the opportunity to sell out when you can. I'm not saying go bearish. That is not what I'm saying. And that's one reason why I'm not changing the thumbnail, because I don't think you need to do that. But I would say take the opportunity to go and sell out some positions before we got to the interest rate decision on Wednesday. I don't think that scenario happens. Honestly, I think probably just kind of chop around a little bit, especially looking at the SPY. I think we'll probably just chop around a little bit. Maybe we do go bullish. Maybe we do hit all-time highs by Wednesday. I don't think we do, but that's what I would do if we did. If the SPY, RSP is hitting all-time highs, obviously before Wednesday FOMC decision, I'd be locking up some positions. The other scenario is if we kind of just pull back, we kind of just hang out until we get to Wednesday. Okay, and then we got the quarter point, we have the pop, we got the rate cut, we move higher into the end of the month. I think next week I would probably change the thumbnail to go ahead and say, yeah, start to look to pull it back, start to sell some positions, sell your big winners, that kind of stuff. But I won't do that until next week. Mostly because I think that scenario will play out to where probably just chop a little bit Monday, Tuesday, Wednesday you get the interest rate decision, quarter point, we move bullish, Thursday, Friday, end of the day, Wednesday, Thursday, Friday, that kind of stuff. So yeah, when that scenario happens, probably next Friday, I'll probably change the thumbnail to go and say sell again. At that point in time, going forward, you know, we'll have to check and reassess the Qs and how they're doing. But I would imagine we probably have a pretty large switch, multi-month, multi-quarter going on between the Qs and the the SPY, RSP, that kind of stuff. So when that happens, yeah, I would rather I'd rather be protecting my capital at that point in time, and that's what I would do. If you don't know really how to allocate, honestly, the scenario I would say is buy 3 to 6 month government bonds and don't worry about the trade price. Now, the trade price is going to be inflected on yields and what yields do and how yields change. So don't worry about that. But then you just carry, you buy your bonds, carry it to expiration or your maturity date, and then get your capital back, and then just keep doing that. That's kind of what I would do, and what I will be probably doing. That's what I would be doing. Anyways, yeah, I mean, have a good weekend. We'll look and reassess next week. But if we get the second half of the week rally, probably expect me to come back here next week and say, probably look to be selling some stuff. Alpha Hunters, have a great weekend. Take care.